Aloha and welcome to Java. Thank you kindly for joining me. It's September 15th, 2024. It is Sunday. I hope you're having a great weekend so far. We are looking at not just the week ahead today, but I've got several other things that I would like to speak about that I think are becoming very important in this scenario that we are watching play out before our eyes. So I hope that you can stay until the end. If you have any questions or comments about the material that I covered today, please feel free to leave it in the comments. I always read the comments, and if you're not comfortable there, or if YouTube blocks you, you can also join us on Discord or look for me on X. Now, there is a link in the description for both of these. Feel free to come in and make comments so that we can speak about these things and answer any questions you have, maybe. Okay, so moving forward with this, because we've got quite a bit to cover. Now, I've changed the format slightly because I'd like to cover these a little more smoothly with what we're looking forward to. Starting with the calendar of what's coming up this week, Empire State Manufacturing Survey. Now, this is supposed to give us an eye into what they're actually producing, at least out of New York. I expect this to be down because there is a lull in what is going on with manufacturing as well as demand in general. Okay, Tuesday, we're getting several reports ranging from retail sales to industrial production, which is also an indicator of the real economy, and home builder confidence level, along with business inventories. Now, these give us an eye into both the retail as well as looking forward a bit for the economy. Now, home builder confidence has been down of late. Now, with this, what everyone is really looking forward to is Wednesday, not just housing starts and building permits, but the FOMC, Central Bank of the United States, making their interest rate decision. After that, Fed Chair Powell will have his press conference where he's got pre-scripted replies. Of course, that's for your convenience, so you already know what he's going to be saying to manage these markets. Now, I'd like to say a quick word about this. We have had the largest market run-up and ready for what they're about to announce on Wednesday in quite some time. So I don't think it's going to be a shock. They do have to make a move. I think it's going to be, personally, my opinion, 0.25%. It's not going to move markets much initially because the market already has this priced in. If anything, the market has overpriced a bit to a half point rate cut, which is a little bit overblown. So I expect sell the news event. I'll speak about this in a little bit after the decision is made, after the markets are managed with their chop. So we'll see what happens. Then we have Thursday, we've got jobless claims, Philadelphia Fed Manufacturing Survey, home sales, and other leading economic indicators. Nothing for Friday, so the big day Wednesday. Now we've got earnings coming in. Again, not too much. Wednesday, not before. Thursday, we've got FedEx and Darden restaurants and Lennar for the home builders. Other than that, not too much. So markets forward, Fed next Wednesday. Another note, I wanted to say that the United States can do whatever they would like with their money printing, with the debt, because I was asked another question about the debt. Once the debt surpasses tax revenue, what happens? And the answer to that, the short answer to that, is nothing. Business continues as usual because the United States enjoys still the freedom of being the reserve currency. So they just continue to increase their debt, print the money, sell treasuries, which is being constantly bought up by the debt and by the Federal Reserve themselves. And we don't have anyone else to answer to, basically. Unlike Draghi, who brought this up in the European Union, they've got serious concerns because their debt is tied together. Now, for instance, in the euro, if one of them has serious debt, say Italy or even Greece, and they drag down that market, they are tied at the hip with the euro, and Germany basically would have to produce more in order to make this up because they are the production engine for Europe. So that's a short question to that. Short answer. It's actually much more to it, but not that we'll speak about here. Okay, so we've got the MMRI hovering around 229 level. Markets had their worst week in quite some time, followed by last week was one of their best weeks in some time. So we've got fear greed returning back to the greed levels in neutral at the moment, looking forward to the FOMC. What does this mean? Sort of sentiment right now. We've got the major players, which I'll speak about in a bit, the VIX, oil, and the yield curve. But right now, the Wednesday announcement is the largest event coming out that is foreseen. So, Fed next week, global tensions right now are high. So, in this market, not financial advice, personally, I'm selling the pops. Expect the market to trend up. There can be corrections. So this is not financial advice again. Green until the Fed, then it will be a sell the news event. So afterwards, market's going to have a very difficult time. So if the market drops, I just want to set a reminder, you don't catch a falling knife, okay? We wait for the floor to set prior to buying any dips. Do your own research on this if you don't understand what I mean. Basically, that means you wait. You don't wait for one green candle. You watch your levels and you wait for it to set that level for a bit. Once it's down there, that's when you buy the dip and watch for the recovery. So we've got the 10-year yield, relative strength of the dollar. Both of those dropped. There's a large amount of bond buying in the background, as well as other trade, which is acting as quantitative easing. Now, looking at cryptocurrencies, Bitcoin is back above 60,000. Now, this is with basically MicroStrategy's made a rather large purchase of Bitcoin. However, in numbers, it was much smaller than the German dropping of their Bitcoin, and yet had this is more of an effect. So there's a lot more things going on behind the scenes right now. So with this, what we're looking at as far as stories. Well, we've got the Fed's rate decision to rock markets this week. I kind of disagree with this. Again, this is the longest priced in rate decision that we've had in some time, and this is not by mistake. They have led us up to this quarter point rate cut, and with their language, at the most would be a half point cut, but it's going to be, I think it's going to be the quarter point. They have to do something nominal to appease the markets, and they will go on from there. So with this, we did have a note on some insider trading from NVIDIA's CEO accelerating his stock sales. So I expect the semiconductors could be a bit weak. They also happen to be hitting a resistance level, which means they're due, I don't know about due, but a bit of a pullback ahead for them. So with this, I want to go into a little bit more. I said the three things that are really moving in the background. VIX, which is volatility index or the fear index of the markets. We've got oil, which is possibly, aside from currency, in my opinion, the most highly manipulated asset on the planet. Okay, oil, not silver. Silver is highly manipulated, but oil. So the yield curve as well, highly manipulated. We know how the Federal Reserve comes straight out and tells us that this is what they do in order to manage the market. So going a little deeper into oil, what is oil? When I ask this question, what I mean is, what is oil as far as a commodity? Is it a currency? The decision is this is used to manipulate markets on a large sense. So back with the stories when you back up and we had the petrodollar, this is the main reserve that was backed with the US dollar. The entirety of trade is based on energy. So, with oil being the main form of energy that is out there, as much as the European Union wants to go green and basically shot themselves in the foot in doing so, oil is the main traded, basically acting as a currency, also a commodity. So I want to bring that to your attention. And again, this whole joint debt market with Draghi, how they're going into debt mostly is through their energy. They cannot produce without an expensive energy, and that is oil. Okay, so moving on. I'd like to address this because this is basically through tradenomics, and all of the stories are tied in. This is where you begin to see the real picture when several of them tie back to the same source. So we've got foreign direct investment into China plunging. China retail sales growing less than estimated, so they're hurting on their real economy as well. The fixed investment rises less than expected, so their fixed asset investment also hurting. We've got China's new home prices falling the most in over 9 years, so that a real estate sector down. With this, we've got uh, US consumer sentiment at a 4-month high. Well, it depends on who you ask. So they are apparently asking only well to do because this is your daily plate of propaganda I'm going to give you right here. If you ask same number of homeless people on the streets, I'm quite sure they're going to have a different answer for you. So every time they have these polls, they are skewed. Just understand that. Okay, we've got the S&P Nasdaq notching 5-day winning streak, as I said before. This is such a disconnected market, and it's throwing danger signs all over. Okay, so this is oddly placed here, but I want to remind also that on Monday, the Trump's World Liberty Financial System for cryptocurrency is set to launch Monday. So this could be a market mover, particularly for cryptocurrencies. So watch that. You're trading those or anything to do with those. So we've got China very weak, looking at doing direct energy trades, specifically liquid natural gas as well as oil with Russia. They've got new pipelines that have gone in. The world is changing. So these are the underpinners to what we see as the currency war or the currency trade. Now, I've been saying for a long time, the yen unwinding trade is not done yet. They're calling it the yen carry trade, but it's the same thing. So basically, this unwinding of this trade is not done. It's going to be balanced out on the other side with oil, which is happening right now, as well as a lot of these other currencies that we're watching float in. Now, what's behind all of this is the banks. So, with this, we're going to take a quick look into Basel III. The Wall Street Bank's largest lenders only facing 9% hike in capital requirements. Now, this goes on to say a lot more things about it, but really, what this is pushing is for the banks have gone to gold. That's why gold has had such a serious run. It's not just a safe haven, but banks, if they have to have capital requirement, they're printing this trash money. They don't want it to hold it as reserves for themselves on their balance sheets. So they are holding gold and pushing out the trash to everybody else to use as currency. That has to wake you up if you don't understand what you have in a dollar bill. So my first recommendation will seem as a contradiction, and that is if you have money in the bank, get it out, get it into physical cash, anything that you don't have to basically pay your bills. Why do I say this? The electronic system of banking is about to shut at any time. Now, there will be a short time that the bridge will happen with physical currency, meaning dollars. In that short period of time, use that time to convert this to real assets, is my not financial advice, recommendation, opinion. So, with this, I put this quote here. If you don't recognize it, basically, it's because we are headed towards much more than a recession. And I want everybody to be ready for this. This is why I'm going on so long today. I'm giving detail in some of these things, hopefully spiking your thoughts and interest about this so that you will either look into this more for yourselves or at least ask questions, please. Okay, I want to go over a few more things. Now, obviously, we've got the United States. This is the part of the currency war. Hiking tariffs on Chinese goods. Now, we know their economy is down. US trying to cut them off with their trade, levying up to 100% taxes by the end of this month. Now, this is going to hurt the United States as well. They understand this. They're hoping that they can choke them out first prior to seeing the inflation that this will cause in the United States. With this, we've got the second largest economy in the world, just raised retirement age. This again is China. American workers should take notice. Well, they cannot fund their retirement programs. United States cannot either. So what they're doing is if you have to work longer, you're more likely to die prior to being able to use this, as well as contributing for a longer period of time. So this helps out their system. If you can't take care of yourselves, don't expect them to, please. So with this, I want to jump over to Russia over here. Russia had every reason to use nukes, but they showed restraint. Now, this was said by Medvedev. Obviously, the European Union is deciding on whether they're going to allow collectively long-range strikes from Ukraine into the heart of Russia. If they do this, they have to be complicit in war, and Russia understands this. This would be NATO behind it. Russia would declare war with NATO. Why did they say this? In order to use these long-range missiles, they need systems and people in order to do the tracking, the satellites, and everything else in order to use these. They cannot be just Ukraine. So with this, there's large threats of nuclear war, and Moscow is saying that the United States is kind of bullying because they feel like they are safe over the expanse of water. Moscow is saying this is not the case, and in this case also neither is Canada, and Trudeau lately has been a large speaker against Russia. So with this, we've got to look to the other side. North Korea has had a secret uranium-enriching facility. They're pushing for more nukes. He wants exponentially more nukes, according to him, and at the same time, highlighting strengthening cooperation with Moscow. So we've got Moscow with China and North Korea, as well as the Middle East. It's danger signs all around, folks, and I just want to urge you to be prepared as possible. Don't be afraid. Don't be afraid. But at the same time, just be aware, ask questions, and please wake up. And if you know anybody that's still sleeping, try to wake them up as well. We need as people to realize, many as possible, what is going on in reality. So with this, thank you kindly for spending your Sunday with me. Wish you all blessings, and until I see you again, stay free.